Hello viewers, welcome to my channel. I'm Hasham. So in this video, I'm going to explain you about the tools and techniques of financial statement analysis. Last video, I have explained you in complete detail regarding the meaning of the term financial statements. Then what are the constituents, what are the items that will be included in financial statements? Then I have explained you about the objectives of making financial statements, then limitations of financial statements, meaning of the term financial statement analysis, significance or importance of financial statement analysis, objectives of financial statement analysis. These are the topics I have already covered in the last video. So don't join right now in this video. First of all, you watch the first video. Be acquainted with the meaning of the term financial statements. The financial statements are the end product of accounting. At the end of the year, after closing all the accounts, the end product, that means the profit and loss account, balance sheet, cash flow statement, a number of schedules, reports, notes will be prepared. So at the end of the financial year, all the reports prepared, notes, schedules, all these are called financial statements. The financial statements will contain all the financial information about the financial performance and also financial position. That is the financial statement. So every business will make financial statements because different parties are interested in the business. So different parties have to take decisions like investors, creditors, employees, government. So many parties are there who are interested in the financial affairs of the business. So they have to take the decision. On the basis of these financial statements, they will take the decision. Then what do you mean by financial statement analysis? Analysis means studying the financial factors in the financial statements. The financial statements contains a number of financial items. Studying those financial items and making a relationship between different items. That is called financial statement analysis. Example, in case of balance sheet, we will have assets and liabilities. We have different types of assets, current assets, and also different types of liabilities, current liability. We'll make a relationship between current assets and current liability. Make a relationship between current assets and current liability and find out some information about the liquidity position of the business. Similarly, we make a relationship in profit and loss account between gross profit and sales, net profit and sales to find out the gross profit ratio, to find out the net profit ratio. So all these things are called financial statement analysis. So what will happen by making this financial statement analysis? We can get lot of financial information. And by using this financial information, a decision maker can take the decision. Whether management or investor or government or creditors, anybody who is interested in the business will take the decision on the basis of this financial statement analysis. That's what I have discussed in the previous video. Now in this video, I'm going to explain you about what are the techniques available for financial statement analysis. So before discussing the technique, take a screenshot of the points which I have written on the board. Then I'll explain all the tools and techniques of financial statement analysis. Come on. Broadly, the tools and techniques of financial statement analysis are 6. But this list is not exhaustive. Any other technique can be included. But the most commonly used techniques of financial statement analysis are these 6. The first one is comparative statement analysis. Second one is trend analysis. The third one is common size statement analysis. Next is cash flow analysis. Next one, funds flow analysis. And the last one, ratio analysis. These are the normally 6 types of techniques available for analyzing the financial statements. But among these 6, the first 3 I am going to explain you in this chapter. In this chapter, we will discuss and also will solve a number of problems on comparative, trend and common size. Separate chapters we will have for cash flow, funds flow and ratio. For cash flow statement analysis, already I have prepared the video, I have uploaded the video. So you can go to the playlist, search where is cash flow statement videos, select those videos, watch the video. I have given the complete explanation about the meaning of the term cash flow statement analysis and how to prepare cash flow statement. Then next comes funds flow analysis. I have not yet uploaded. In the next few days, I'll take up the topic of funds flow analysis and I'll upload all the videos, inshallah. Then ratio analysis, already I have uploaded all the videos on ratios, explaining the theory regarding what is ratio, what are the advantages of calculation, what are the limitations of ratio and classification of ratio. Then number of problems I have solved. So if you want the perfect knowledge on this ratio, go to the playlist, select the videos of ratio analysis, watch it carefully with full concentration. Definitely you will gain a lot of knowledge from these videos. So out of 6, the first 3 I am going to explain. I am going to do the problems on first 3. What are the first 3? Comparative statement, trend analysis and common size statement analysis. First of all, comparative. Comparative statement analysis means analyzing the financial information of 2 years of the same entity. 2 years we are comparing, last year with the current year. So that's why the name itself is comparative, means we are making the comparison of 2 period data. 2 period data showing the relation, showing the difference in absolute terms and in percentage terms. Example, in comparative statement analysis, we'll make the columns of last year amount column, current year amount column. Last year sales were, let it be 1 lakh. Current year sales are 1,20,000. So last year 1 lakh sales, current year 1,20,000 sales. So we can say 20,000 sales have increased. So one column absolute change 20,000. Percentage change how much? 20%. The sales have increased by 20%. Like this, for every item of the financial statement, we are expressing the last year amount, current year amount, absolute change and percentage change. This is called comparative statement. So comparative statement financial analysis refers to comparison of financial statements pertaining to 2 different periods by putting them side by side and finding out the changes in absolute and relative terms. Side by side we are putting the data of last year and current year, 2 periods. 2 periods data we are putting side by side and then we are finding out the change from last year to current year. How much is the increase or decrease? Absolute terms. Apart from that, relative terms. Relative means percentage terms. Then this is called intra-firm comparison. 2 types of comparisons are there, intra-firm and inter-firm. Intra-firm comparison means within the same firm. The same company will compare the last year data with the current year data. Example, last year 2021, current year 2022. So we are having 2 years financial information. We are putting 2021 and 2022 side by side and comparing in absolute and relative terms. So intra-firm. And inter-firm means comparing one firm with another firm. So here this comparative statement analysis is meant for intra-firm, within the same firm. So comparative statement analysis is a tool that can be used to analyze the financial position or financial performance of an entity. Comparative statement can be used for comparing the financial position and of comparing the financial performance. Performance means profitability. So we can make the comparative statement analysis by comparing the profitability, that is comparison financial performance. And position. Position means assets and liabilities. What are the changes in the assets and liabilities? That is financial position. Now, comparative statement consists of 5 columns. In this comparative statement, we'll make 5 columns. The first column, particulars. Second column, last year amounts. Third column, current year's amounts. Fourth column, absolute change. And the last 5th column, percentage change. So particular, last year amount, current year amount, absolute change and percentage change. These are the 5 columns we are going to open for comparative statement. So right now, briefly I'm explaining how to make. In the problems, I'll do it practically how to make the comparative statement analysis. But in examination, a theory question will be asked. Explain what do you mean by comparative statement analysis. So simply you can say it's a technique of comparing the data of 2 periods, finding out the changes in absolute terms and in relative terms or percentage terms. So comparative statement can be prepared for financial position, or comparative statement can be prepared for financial performance. That's it. Now next technique is trend analysis. The trend analysis is an extension of comparative statement analysis. It's an extension. In comparative statement analysis, we are comparing only 2 years. When we want to compare for more than 2 years, then we will apply for trend analysis. Example, for only 2 years, 2021 and 2022, only 2 years data is given, so we can make the comparative. Suppose if the data is given for 5 years, that means the data is given for 2018, 18, 19, 20, 21, 22. So 2018, 2019, 2020, 2021 and 2022. 5 years financial information is given. Now we want to find out what are the changes during the 5-year period. These changes over a period of time, we apply trend analysis. So it's an extension of comparative statement analysis. Trend analysis is an extension of comparative statement analysis. It is very useful and effective tool for horizontal analysis of financial statements. Horizontal means comparing more than 2 years. Comparing more than 2 years. Then trend analysis involves computation of index numbers of movement of various financial items in the financial statements for a number of periods. Movement of the items. Example, the sales are given. The sales are given for 2018, 19, 20, 21, 22. 5 years sales are given. Now we want to find out the movement of sales. Whether the sales are showing increasing trend or declining trend or fluctuating over a period of 5 years. The movement of the values over a period of time, we apply trend analysis. So it helps in understanding the nature and rate of movement in various financial factors. The main purpose why this trend analysis will be used to understand the nature of movement, how the financial factors are moving, changing over a period of time. Then steps. How to find out the trend values. 3 steps I have given here. The first step is select one of the period as base period. Normally, if 5 years are given, 2018, 2019, 2020, 21, 2021, 2022, 5 years data is given. The first year will be treated normally as a base year. The first year is 2018. So 2018 will be selected as a base period. Second, every item in the base period is taken as 100. Now, in the base year 2018, we take all the financial factors as 100 only. All the items we take it as 100, base period. And trend values of each item of any other period can be calculated as follows. How to find out the trend values of other years? Base year already we have taken 100. Then how to find out the trend values of other years? The formula is there. Absolute value of current period divided by absolute value of the base period into 100. So information is given. Absolute items are given in the problem. So take in numerator absolute value in current year. Denominator absolute value in the base year into 100. This will give you trend values for all other factors. So these three steps will be applied to calculate the trend values. That's it. So in examination, theory question may be asked regarding what is comparative statement analysis, what is trend analysis. I have explained you. The concept will be more clear while doing the problems. In the next video onwards, we'll start the problems. Next, last technique I'm going to explain in this video is common size statement analysis. This is also one of the widely used financial statement analyzing technique. Financial statement analysis technique, which is that common size. In common size, we condense all the financial statement values into percentages. So a common size statement facilitates comparison of financial statement of not only a single firm but also comparison of financial statement of different companies for a given period of time. So this common size statement can be used even for the single firm, or we can make use comparison of different firms. For both we can make use. That means making a common size of the single entity or making a common size of multiple entities. We can make the common size. So how to make the common size here? Under this method, all items of the statement are presented as a percentage or ratio of a particular item. We select a particular item as base. We express all other items as a percentage of base. That's what we call common size. So first of all, you have to select a base item in the financial statement. Example, in case of profit and loss account, income statement. In profit and loss account, we all know the biggest item or the critical significant item is the sales. Sale revenue. Revenue is the biggest item. So we take revenue as 100% and find out all other variables as a percentage of sales. Percentage of sales. Example, the total sales are 1 lakh. We treat it as 100%. 1 lakh, we treat it as 100%. Now, in the net profit, we are having the net profit 20,000. So 20,000, we are having a net profit. The sales are 1 lakh. So we can calculate and find out what is the percentage of net profit on sales. That means 20,000 divided by 1 lakh into 100. It comes to 20%. Simple words, net profit is 20% of sales. Like this, what is the percentage of gross profit on sales? What is the percentage of salaries on sales? What is the percentage of rent on sales? So the base item which we have selected is sales. Express all other items as a percentage of sales. This is in the income statement. In balance sheet, how to make the common size? Take the total assets as 100%. Total assets will be taken as base 100%. Express all other items as a percentage of total assets. Example, the total assets are 10 lakh. Total assets are 10 lakh. Inventory is 2 lakh. Inventory means stock. The stock is 2 lakh. So what is the percentage of stock on total assets? So 2 lakh divided by 10 lakh into 100. 20%. We can say stock is 20% of total assets. Like this, we condense the values. we express all the values as a percentage of the base. The base is sales in case of profit and loss account and total assets in case of balance sheet. So here in common size income statement or profit and loss account means same. Income statement, all items are presented as a percentage of net revenue. Net revenue means net sales. And a common size balance sheet shows each item as a percentage of total assets. So in balance sheet, every item will be calculated as a percentage of total assets. So a cash flow statement, a common size statement helps in determining the relative efficiency and soundness of a firm and helps in understanding the financial strategy. That is the main purpose of making this common size statement. So in this chapter, we are going to do the problems on comparative statement analysis, trend analysis, and common size statement analysis. So if you have watched this video from beginning, definitely you got the idea regarding what are the techniques available for financial statement analysis. In the next video, inshallah, I will start the problems on this financial statement analysis, techniques of financial statement analysis.